Hey guys, welcome back to the channel. I remember when I started to invest in the stock market, I had to pay $29 per transaction. Back in 2009, there was really no other choice. But over time, the cost of trading stocks fell to $10 and then $6 and then even lower. And now pretty much anyone can buy or sell stocks or ETFs commission free. And not only that, but we now have new asset allocation funds, which means instead of building your own portfolio from scratch, you can now just invest in these all-in-one ETF solutions for pretty much all your investment needs. You can just dollar cost average into a single diversified fund, and when you eventually retire, you'll be financially ahead of 95% of everyone else. And you don't even have to pay any trading commissions. Investing for success today is convenient, cheap, and passive, which means you don't have to do any research into individual stocks or try to time the market. I don't think there's ever been a better time to start investing than right now. So the only question is, which all-in-one fund should you invest in? So in this video, I'll introduce and compare two popular all-in-one funds, XEQT from iShares and VEQT from Vanguard. Both of these companies offer an asset allocation index fund that tracks the global stock market. The funds don't actually buy individual stocks. How they work is they hold a diversified basket of other ETFs that track the financial markets in different countries. Let's start by taking a look at XEQT. This is the iShares Core Equity ETF, which has been around for a couple of years and has a management cost of 0.2%. It holds some cash, but it's primarily made up of four separate funds. The fund components are a US-based index fund, a Canadian fund, other developed economies, and a fund that tracks the performance of emerging markets. Now, you might be wondering if XEQT has an MER of 0.2%, do you have to pay this cost plus the management fees of all the other ETFs inside XEQT? And the good news is, no, you don't. Securities laws prohibit ETFs from charging management fees twice. So you would only pay the listed MER of XEQT, which is 0.2%, and not get charged a second time on any of the underlying MERs. The same is true for other fund of funds products, such as VEQT. Speaking of which, the Vanguard All Equity ETF portfolio was also created in 2019, and it has an MER of 0.24%, and here are all the funds held within it. As you can see, it's very similar to XEQT's model, with four different funds tracking indexes in the United States, Canada, other developed countries, and emerging markets. So which one is better? Well, there's no definitive answer for this, but there are nuanced ways you can think about it. So let's dive in and compare them side by side. First, we can look at the cost. XEQT has an MER of 0.2%, and VEQT is 0.04% higher. This means on a $10,000 portfolio, you'll pay $4 more per year. So it's a slight win for iShares, but it's not a big deal. And management fees can change over time, so I wouldn't put too much weight on a slightly lower or higher MER. Next, we can compare the broad asset allocation of each fund. XEQT has slightly higher US and developed market exposure, while Vanguard's all-in-one solution puts greater focus on Canadian and emerging markets. Technically, you're probably better diversified globally with XEQT, as Canadian stocks only make up about 3% of the world's stock market, so having nearly a quarter of your portfolio in Canadian equities should already be more than enough. In terms of cash distributions, they both have fairly low yields, but XEQT has a slightly higher 12-month yield of 1.71% paid out quarterly, while VEQT's distributions are paid out once a year. This shouldn't matter too much for most investors because it's the total return that you want to focus on, but this could affect someone's decisions if they have a particular dividend strategy. When it comes to which types of companies each fund holds, it's very similar. Here's the sector breakdown of each ETF. So the iShares fund has slightly more exposure to technology stocks, but Vanguard offers more opportunities in financial services. If you have a strong feeling that a particular sector will do extremely well in the future, then choose the ETF with a higher exposure to that segment of the market. Otherwise, I don't see a strong case to be made for one fund or the other here. Finally, we can compare the funds based on their environmental, social, and governance impact using an ESG-based sustainability rating. According to Morningstar, both are sort of in the middle of the spectrum, which makes sense because these funds act as proxies for the general global market. Although XEQT does have a slightly lower carbon risk score and contains fewer companies that are involved in the fossil fuel industry. So that pretty much wraps up my XEQT versus VEQT comparison. If you're still watching this, then I'd like to give you my personal thoughts on these. In practice, it likely doesn't matter too much which one you choose, as both will likely give you similar strong performance over the long run. You honestly can't go wrong with either one. But for my own situation, I would give the edge slightly to XEQT at this point. It has more exposure to the US market and less focused on Canada, which I think is a better long term play. I'm also more bullish on the technology sector, which XEQT has more exposure to overall, and the slightly lower management fee doesn't hurt either. Now, if you're living in the United States or you want to buy a diversified ETF using US dollars, then the ticker symbol you should be looking at is VT, which is the Vanguard Total World Stock ETF. Just buy it, hold it, and buy some more, and you won't be disappointed with the long term results. I've done a whole video on pretty much this ETF in the past. So the point of VT or XEQT or VEQT or any of the other all-in-one ETF solutions is to really just to get you started in the world of investing. And you should do really well even if you stick to this one strategy your entire investing career. Or you can always specialize and narrow down your investment strategy in the future as you learn more about how the markets work, your relationship with money, and your personal risk tolerance. But buying a passive investment fund is not a bad place to start for most investors. Anyway, thanks for watching this video. I hope you found this informative and useful. I know there are many other all-in-one ETFs out there like VGRO, XBAL, etc. The reason I only compared VEQT and XEQT is because I believe these two are the best long-term investment solutions for most Canadian investors. But everyone's situation is different. If you have any iShares or Vanguard ETF suggestions, put them in the comments below. Maybe I haven't heard about them yet. And I'll talk to you in the next one.